Hello and welcome everyone. This is the Automate Trading webinar for beginners. I'm Danny and we can hit the road. So before we will begin, let's get ourselves a notepad for the notes. And as I've explained, we will open the webinar with an introduction to the company in this facility. So as many of you know, we are a regulated company. We have 9 licenses worldwide. If you got any question or query, you can find it right here at the bottom left. We've got the chat or on the WhatsApp, whichever way you prefer to communicate with us. And for people who are using different interface, you can contact customer service directly at customer service cs@avatrade.com. This is everything's related to customer service. You can access in those 3 ways. And then for trading, we can have a senior account manager assigned on your profile that can assist you with all the trading side. That means that from analysis, risk, money management, designing a strategy, trading plan, all kind of things you would want to ask somebody about trading, the senior account manager is the go-to person. There is a question here. What is the name of the YouTube channel? Thank you for the excellent question. As I said, just AvaTrade. AvaTrade, that is the name of the channel, just like this. All right. And yeah, I'm sure you can find it. All right, so as I've explained, those 2 things that can really assist you along your journey. And as I've explained, we're having the webinar on the Web Trader. The Web Trader can also be downloaded to your phone in a form of an app that's called AvaTrade's Trading App. All right, and besides that, we have the regular platforms. MT4, MT5. For those who would like to trade options, we've also got our options and our futures. And lastly, our social, okay, which became very popular recently. I'll explain to you also why and how it can be helpful for a beginner. So in Ava Social, you can do 2 main things. You can do a lot of things, but those 2 main features are what we're going to speak about today, which is follow and copy. And how does that work? Let's suppose that I'm trader A and I am a beginner. I'm not exactly sure what about my next move is going to be or what I'm even going to trade. I'm not sure about any of that. So what I can do is I can download Ava Social for free. And I can choose from lists of traders if to follow or copy another trader. What that gives me is naturally very good to inspire my own strategy if I want to. Otherwise, what will happen is I will get messages with what the trader B has done. I will get in a shape of similar to signals, I will get a message with the position that trader B has take, and I choose to either do it the same way or not. I can even maybe adjust it and maybe use it in different ways. But the idea is that I'm following a strategy, I'm getting messages, and I need to open a position on my own. What if I would want to automate the system and to copy the strategy without me needing to open a position every time? Then I choose the other option. The other option is copy, which means that I'm linking my account to Traders B account and it will run automatically. I'm still going to be able to go back and monitor all the positions that happen on my account that Trader B took in his strategy, but it's not necessary for me to open the position the same way. Why? Because it's copy trading. Those are the differences. Follow, I will get notifications. Copy runs the position the same way. Now, the huge benefit using Ava Social is that, as you can see, my account is a demo account with 10,000 balance. But what if I would want to copy someone with more, 20 or 50 or more? Then my account might run to a problem. It doesn't have enough margin to do the same things, right? So for that, what I can do is I can just reduce the load size, not in here, in the app. And in the app, you can choose to copy the strategy, but with a lower lot size, which gives me the ability to examine and see if this is a strategy that my account is something I can, I wish to carry on with or not. All right, maybe the natural order for me would be to first do the research, follow, and then copy. Of course, it's not mandatory, but that's just something to think about. As I have explained, Ava Social is for free. I see no reason not to download that. All right, let's carry on with ease with the rest of the facility. As I have explained, there are some useful menus here to the left. We're going to begin from the top. In here, you can find your personal information, those 3 lines in here at the top. Underneath, we've got trade. This is where we are at right now, and this is by default the screen you're going to get when you're logging into your account and the web trader. Which I said we're using the desktop version. We're using the desktop version, but the features that I'm going to show you can also be found on the app, on the phone. All right, now to get to here from any other place on the website, because let's suppose that we are here, is an example, and I'm going to show you that. Don't worry, we're coming back to that. But let's suppose that we're in here and we quickly want to go back to the default screen to do the charts. So what I can do is either click here on trade or just on the icon. And I'm right back here, back to the default, and I can do what I want. Underneath, we've got positions. So we've got no positions, nothing will be displayed. Orders for pending orders and so. History speaks by itself, right? We can sum here the range of what history we're looking for. In here, we've got the signals. So the way that this works is very simple. We can see there is a list here displayed. And I can show you also how to do it from the outside, but it's let's focus at the moment on the signal section, as you can see. On your phone, what you can do, and difference from the computer, you're gonna have a toggle here in the middle between the, sometimes it's displayed in here, sometimes it's displayed in here. That depends how you tilt your device. And you can also enable to receive this as a message to your phone rather than to always go back and manually get the signal. Okay, so you can enable this on your phone, on your phone, as I've explained, with a toggle here and on your notification settings. Now, yeah, let's, for instance, if we'll take, they're both with the buy, maybe we'll go with NASDAQ. Just before I click on something here, I would like you guys to notice that the signal production date is appearing from the newest to the oldest at the bottom. So this is the newest, but if I scroll down like this, when we get to the bottom, this will be the oldest signals. All right, why does this make any difference if I'm taking a signal that was just analyzed or a signal that was analyzed 5-6 hours ago? Okay, you can do the math, but you can understand that since the market is moving up and down, the scenarios with the signal that was produced might have changed. Okay, so for instance, if I look at NASDAQ, it seems like a buy type. We're going to click here on view signal quickly, and we'll expand with the 2 arrows here the chart. And then we can see huge plunge that we had on. Okay, so this is a different chart, as you guys notice. And the reason is this validity is daily. This time frame is 1M. What is 1M? 1M, 1 minute. Okay, so this crazy bearish trend we've got here actually happened during 1 minute. Yeah. We're not doing any analysis here, but I just want to show you guys for you to understand. You see this 100, not exactly 100. Let's see how much is that. Okay, roughly $63 drop. There's a quick recovery here. Okay, I don't want to go too far, but the idea here that we're looking at, we've got dailies on here, we've got minutes on here, and this is why it's different. What do I do now? I just click here on the time length and I scroll down, choose 1D. So we've got some minutes, hours, days, weeks, and months. We're going to select the days, and now we can get similar. Just hold on. Okay, sometimes needs a little bit of encouragement, but as you can see, the chart is getting closer and closer onto the picture we've got here. And this allows us to assess and place the same levels that we've got here on the lines on the chart similarly. Of course, we don't have to do that, right? We don't have to do that. The whole purpose to use the signal is to just select a scenario and give it a go. But if we would want to further enhance what's happening here, we can do that, and we can, like I said, we can improve it even more with our own analysis. Okay, but let's suppose that we don't want to do any of that. We just want to use the signal as it is without anything addition. So all I gotta do, click on signals, click on NASDAQ, click on the scenario that we want. Let's suppose we want to go with a buy. We've got two scenarios here. In here, we've got some levels. We click on buy. So this is 2 times we clicked. This is the 3rd time we'll already send the signal out. We'll launch the position. Okay, again, 1 minute. We can change it if we want. We can see that already displayed here automatically the possible profit and possible loss. Just a moment. All right, and and we can see that now the possible profit is 190 and the possible loss is 124. All right, but what is take profit and stop loss? Let's first understand. So we've got regular orders. At the moment, we're looking at NASDAQ. Just quickly jot that down. Okay, and we have got the price. Now price is 19,500 and bouncing. Okay, and then we've got, so at the moment, if I'll click here with the buy selected, I click on buy, what will happen is I will have a position with NASDAQ with 0.01. All right, and I will get it at the current price. I'm buying at the current price. This is the buy price, this is the sell price. All right, now what if I don't want to stay on the chart forever and wait until NASDAQ is gonna get to the price I'm looking for? Let's suppose that I don't want to buy now, I want to buy a little lower, maybe 19,400. What I can do is I can click here on execute when price hits, set a pending order. We'll understand what it means in a moment. And with this pending order, I will automate my entry. So we've got pending orders. Okay, and we've got market execution. Buying or selling now. Okay, pending orders. Automatic order triggered by price. And that is precisely how the signal works. How the signal is happening, what's happening when we're using the signal clicking here buy. Actually, we're automated with take profit and stop loss that will trigger when reaching that price. So if I'll quickly take that price and I will place it in a line like this, maybe green, to help emphasize this is the profit target price, and this will be red as this is the allegedly the loss target price. And we can quickly see if it gets to here, we'll make, okay, let me bring the entry back originally to what happened with the signal. If it gets to the green line, we'll make almost 200. If it gets to the red line, we're going to potentially lose 120. This is automatically done by the signal. I didn't do anything, okay? Click here again. Just look how simple. Clicking on the signal, clicking on buy, and we are good to go. All right, those things set for us automatically. This is based on the analysis we've got on the signal. All right, what does that mean? It means, as you can see here, what you don't have to remember that when it reached the target price, it will take the profit. When it reached the red line, it stops the position from losing more. Stop loss and take profit. Very useful. Now I can click here buy, go to work, whatever I need to do, and this will happen automatically on the chart. What I did here with execute when price hits is I automated the entry, and the same way that I've selected gold price here, we can target the entry as well. And instead of buying it at the market price like that, we can set what kind of entry we want. Because maybe we're looking for a reversal, maybe we're looking for something to happen to confirm, who knows? Okay, but this is one of the things that we can do. As I have explained, we don't have to. We don't have to do any of that. 3 clicks and the signal is launched. Now, before we carry on, I just want to show you what happens if you click on those things without the take profit and the stop loss, right? So we've got the signal section as I've through here as I've showed, and we've got pound versus dollar with blanks, take profit and stop loss. Why they are blanks? The reason is if I'll click here on view signal and I'll expand the chart again and I match the validity to days. Okay, we're already on days, excellent. And now it appears that the signal is no longer valid. Why is that? Because the market has already reached a key level. And if I'll try to use this signal the same way we did with Nasdaq, maybe this time with a sell, it's not gonna let me. And there is no take profit and no stop loss designed for me at the moment. Why? We've already have a message explaining us why, because the market has already reached a key level, which connects directly to what I said about when the signal was produced 5 minutes ago. So to recap, in 20 seconds, what I can do is I can go to the signal section, choose whatever signal I want, clicking on it, using it, and modifying it. That took me 5 seconds. As I've explained, in certain cases, the signal has already passed the analysis that was on it, and if we'll try to use it, it's not going to let us. Another example, using the FTSE, and it's displaying us that the market has already reached. All right, before I carry on, guys, any questions about what I said so far? About the signals, about the anything else? How can we know if an instrument? All right, thank you, Tobias. We've got a question. How can I know if the instrument has a signal or not? Well, one way is to search from the categories in here. So let's suppose that I want to have a signal for, let's suppose that I'm trading gold, okay, and I can't find gold. Gold is right here, but let's suppose that we're looking for gold like that. We can't find gold. Okay, but we want to know if gold has a signal or not, right? So we can go to commodities and we find gold very easily. Another alternative to do this is to click on the AVA trade to go back to the default, and in here search symbol, we're going to type gold and select it from the list. And we can see that we have this blue lightning icon, and it displays that the gold has a signal and we can easily use it. Yeah? Right. Another question from John. Thank you very much. The market closes. What happens to my trade if I did not out? Yeah, I'm not sure that I understand your question, John. I think you're missing a word in your question, unfortunately. But I'm just going to tell you that when the market is closed, the positions will not be executed only when the market is open again. And you can review when the market is open here to the right panel if you click on instrument details and see the time of the instrument that you're trading, which simplified here the times and days that the market is opened. This signals was manufactured not by AvaTrade but by the Trading Central. as you can see here. And further, this is considered technical analysis. Okay, the support and resistance, we'll speak about those levels when we get to the analysis part, because now I'm afraid that it only might confuse us if we'll speak about it more. Okay, so if I go further down, we have here the news. We kind of already saw that section. We've got articles here, also categories. If I'll scroll down at the bottom of the article, we have here also what's related instruments. And those instruments are related to the articles we're reading. What if we want something else? Again, we can select from the different categories. If we'll scroll down, we've got discovery, and in discovery, there are many interesting things, which we're not gonna go through all of them, only maybe through two of them. Market buzz. Okay, this can help inspire what is interesting these days, popular these days online on the market, that's worth maybe doing the research. This screen here can be displayed in two ways, through bubbles, as we are having now, or on the table for more conservative people, and this is how you can see it on a list. If I'll stick with the bubbles and I'll select what's in the middle, maybe Tesla has, you see that the bigger it gets, the means that more mentions it has. So Apple has 455, Tesla is bigger, 700, Meta 22.7, Amazon, and so on, Microsoft. All right, so select, if we select what is in the middle. Also, we've got here very interesting parameters. In here, certain topics which we can focus on: revenue decrease, product demand release, macro indicator decrease, product demand decrease, and micro indicator. Now, let's suppose that I don't want to go through all of those because I am more into the revenue decrease because I want to know why and what happened, and then to go directly to the market and do the analysis. I'm going to select mark the box here, and then what will appear is only articles related to that, which makes my job much easier doing fundamental analysis because I can directly focus on what matters to me. I can, of course, we've got all kind of parameters here, price may increase, and all kind of things, which I can go through. Then I can also go back and choose something else. We've got here another question from Marie Spell. Does the signal says about bull or sell? Means, does it gives any the indication to choose which option buy or sell? This is actually a very pretty good question. I'm just going to answer your question in roughly half a minute because I want to finish to show the facility here, and in the charts I'm going to show your question. Okay, so all right. Now, what I did here is I again pointed on discovery, and at the bottom here we have economic calendar. In the economic calendar, aside from what we saw, the buzz and the news section, we've got here all kind of interesting okay, this is displaying us. It appears that we've got no filters on. Yes, that's fine. That's fine. So when you've got no filters on, what will happen is you're going to get all various events. Now, this can be useful if I'm analyzing everything, okay, which I rarely do. What I do is I usually focus on a specific pair, on a specific economy, and that helps me be more precise on my analysis. And for that, what I can do is click here on the arrow, select what I'm more interested in, maybe only dollar and the pound, and then we're gonna get only news, excuse me guys. And then we're gonna get only news for pound and the dollar. And you can see here that I selected today and I increased from today till the 16th. And we can see that now we're getting a nice range of from today 2 weeks forward, marked by this blue trail here. Now, another parameter that we can filter here is the importance. The importance, so-called in other calendars, is called the impact. The impact, how strong we think that this event will affect on the market. If it's a major event, related interest, or something like that, it can be marked in red, in high. Then we've got low and medium. Again, let's suppose that I'm not really interested in those low, no offense, but low importance. So what I can do is I can click on high, and then only high will be displayed. So we filter a couple of things here to help get a more precise and specific picture to our analysis. But if I want to go back to no filters, I can do it in 1 second. Before I do that, I would just like to explain about how the calendar is constructed, because there is a useful feature here that I'm going to show you. So previous speaks by itself. This is the previous result. Forecast is the range of what we're expecting that it will get. Actual will only be displayed when the event has already took place, because who can know the result before the event? And we've already saw the importance part. Okay, I just want to show you. Let's maybe go back like that, and then I want to show you. You see, there's this red line here with the actual, and this is how it's displayed. You can notice that it's a bit brighter underneath the red line, but above the red line, the font is a bit more fade, right? I hope you notice. And then we've got the result here and everything. Now, apart from that, before we finish this segment and move to the second part, to the practical part, there is only one feature that I want to show you. You see that there are here a few icons. We've got here the impact, volatility, price chart, event chart, and lastly, add to calendar. Now, guys, this is wonderful. This is wonderful in many ways, because to remember when is the event and to specifically go to the calendar and see the result and then go to the chart, this to happen in the middle of the day is it requires focus. What I can do here is I can just click here on whatever calendar I've got and to book the event onto my calendar. And I can then specifically check the message that I received before the time of the event, directly go to the market, directly do the analysis, and I'm good to go. This is a huge time saver that I like. Okay, use it. I think we spoke enough about the facility here. We can carry on with ease to the second part. We'll click here on reset, and we back to default. All right, back to default, no filters applied. Now to go back to the default screen, we'll click here on AvaTrade. Oh, there is a question from Marie Tpel about the signals, if it's buy or sell. So just quickly going back to the signals, as I've explained, there are certain scenarios here. So if, for instance, we'll choose anything, if again, we'll look at NASDAQ again, or maybe Dow Jones, we can see and make comparison to the chart and select buy or sell based on the analysis displayed to the right. Now, of course, your question was if to take a buy or sell, which no one can know. But if you look at the production time and you compare the market and analyze the trend, this might give you a direction of if the market goes to the direction displayed on the sell scenario or on the buy scenario. And according to that, you can choose if you want to go with the trend or against the trend. I hope that this helps. Now, let's carry on. As I said, click here on to go back to the default, click here to expand the chart all the way, and let's search our maybe we'll show you how to do it from the outside, and then we'll show you how to search. So from here, if I'm not sure which instrument I would like to see, I can look manually like this through the categories, or maybe specifically type what I want. So let's suppose that how is oil looking? We've already got some analysis on it, and that doesn't look too bad, to be honest. Okay. All right, but for the sake of the example, let's put something else and then we'll switch back to oil. So let's suppose I want to see gold. I don't want to go outside. What I'm going to do is just click here on the icon here, the name here, the symbol here, and I'll type gold, then select gold from the list, and I'm good to go. As you can see, gold is still generally bullish, even though yesterday it was bearish, but another all-time high, which is just insane. If we compare the general trend, we can easily see that. Okay, maybe just a second. Let's get to that in a moment. I first want to show the facility, and then I'll show you how to use the chart. Okay, so if I'll go from here, the search box to the right, we've got here the time frames. We're already familiar with that. We've changed it in the signal section. In here, we've got the candles. Okay, it's crude oil, but it's showing us gold. So let's bring oil again. Okay, and as I said, we have got some interesting things, which is changing the candles from candles to line. Why does this make any difference if I'm looking at the candles or the line? Well, we've learned before that with the candles, we get a bit more specific analysis that in some cases help analyze the market. So if you notice, there are two lines here extended from the candles, which makes this one a reversed hammer. And in here, we've got a nice popsicle. So if I'll switch to the line, those lines disappear. Okay, they disappear and doesn't allow us to do the same analysis as we've got with the candles. So we've got those rectangles here. We'll click on candles and they are back showing us those lines. Okay, now if we keep going to the right, we've got here the crosshair. Of course, we're getting no data from the chart because the crosshair is not active. We'll activate a crosshair and now we've got data from the candles. Now, if I keep going to the right, we can split the screen to have two charts on the same screen. And of course, we can choose even more and split it to even more screens. Okay, maybe 3 charts, maybe 4 charts, a lot of charts. Okay, we'll go back to the default, and to the right, we've got indicators. There's no need because we're gonna use it anyway. Now, in here, if I click on the arrow, we have a list of all kind of useful things. Again, we're gonna use it, so no need to explain about that now. If I'll click on buy or sell, we've got to the right here, something that I showed in the signal section as well. We've got the information that can be found on the second tab. Hours, specifications, and numbers related to the instrument we're trading, information that can be useful. Clicking here on order entry, and the first thing that I'm doing is to customize the lot size to 0.01. Why? Because from here I can always increase to what I want. Now let's get rid of everything we've done here. It's unnecessary at the moment, and focus on the position. So we've got the now price. Okay, maybe current price that will keep changing, but let's make it maybe 71, just to have a flat number. And as we've learned, we've got market execution and pending orders. So if I look at the chart, obviously you can see we've got here a very nice bullish trend. Well, it's in the past few days it's bearish, but the general trend is quite visible to be bullish. And we'll maybe make it like this, this funnel here, and we can see that slightly higher. This one's in the middle. Okay, 70.4 makes sense, right? Okay, now if I assume that crude oil will go up, that means that I'm in a buy scenario. What does that mean, a buy scenario? Well, in a buy scenario, our intention is that always the value will increase. So that means now that the target that I will target, the price that I will target will be in a higher value. So now if the order entry will be 71, okay, almost 71, I assume it will get there in the next few minutes, then it will launch a position in this price. Okay, if the price increases from where it's at right now by $2, let's simulate that. Again, using the take profit. So we're gonna write here 73. We can see that if it moves from the entry into the green line, we're gonna make $20. How so? Well, because as we can see displayed in here, we've got 10 barrels. Okay, so 10 barrels over price change of $2 gives us, we don't really need a calculator for that, but since we're having, this is a webinar and we would like to learn, so we will do it together, right? 10 barrels, okay, equals 20. From that, we can understand a very simple equation: units times movements equals possible profit or loss. All right. Now, with this 71 in mind, I still would like to confirm that this 73 is something that oil can get to, because as you can see in here, last time that it's been on that price was, let's check it together, it was 20 of February. 20 of February, that was roughly a month and a half ago, right? And I'm aiming for this $2 to happen. I'm not sure that it will get there in 2 days, because statistically it's been there a month and a half ago. So how can I still confirm that it can get to here? At the moment it seems bearish. Maybe we'll change it to a sell. We'll see in the next 5 minutes what will happen. So how can I validate that this is a price that it can get to? Well, one of the things that I can do is I can compare the previous candles, okay, and see via the movements. We see the movements here, right? We see via the movements how much it's moving per days, because we're looking at days, okay? As an example, yesterday open was 71.3, close was 71.25, almost no movements, high and low is 71 and 72. So we can see $1 difference. Okay, well, 73 from 71, if it moves $1 per day, roughly 2 days, okay, I can live with that. Maybe. I need a better way though, because this candle here is a small candle compared to the previous. Maybe we can have even bigger movements. Okay, so what I can do is I can apply an indicator called average true range to help me confirm if 73 is something that can happen or not. So we'll click here on indicators, we'll search for AVE, average true range, click and drag it to the right. In here, we'll change the color to something that doesn't confuse us, like this. Then we click save. Of course, this indicator is based on how many candles we would wish that it will analyze. We can see that it's marked on 14. Therefore, now 14 candles will be analyzed. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay, until here, roughly here, excluding the weekends. And we can see that the average is indeed $1. Not bad. So the analysis we've done on this candle actually makes sense. Now, let's set ourselves a target, because making 20 is not really what I'm here for. What I'm here for is making not 20, maybe 200 sounds better. Okay, so let's set a target 200, and maybe analyzing dailies. Let's stay with days. I think 200 per day sounds great. Why does this make any difference if I'm planning to hold this position per day, per week, per month, because 200 will be a comparison to the time frame that I'm planning to hold a position. For instance, if 200 is my target, but my casually positions are held for months or maybe a year, let's say 1 month. If I'm holding the position for a month, to make 200, that's ridiculous, right? 1 week, okay, maybe 200 a week, maybe 400, 800 a month, not bad, not bad. But I think per day is more reasonable, right? At least for me. So the next ingredient that I'm going to think about is obviously the movements, price difference. Okay, again, the reason that I want to do that is because I can't target hypothetical price like maybe 80 from where we are at right now, thinking it will get there in a day. Okay, and why not? First, I can compare statistically where it's been there, and it's been there more than 2 months. Secondly, the average movement is only $1 per day. So from 71 to 80, that's almost $10, right? I don't want to target something too far-fetched because it might not get there. And I want to automate the take profit to something realistic that can close. And well, 73 is only $2 away. So moving $1 per day, I can assume that if it will move up, it can get there in a day or two, right? Again, if this proceeds, I might change it to a sell. This is why it's good to have observation on the market and not to swiftly just take a position, right? That's the whole point doing analysis. So the scenario might change, but the analysis is still useful and viable. Now, let's carry on with E is the last ingredients that we're gonna jot down. Oh, let's first jot down the ATR since it aligns with the previous candle. So the ATR is 1.0679. 1.0679, not bad. And the units that we need. All right, so let's see who's fast. We've got $20 with 10 barrels. We got $20. Okay, $2 movement times 10 barrels equals $20. $2 movements times question mark barrels equals 200. Who can give me an answer to that? Okay, so we're gonna flip the 200, yeah, and we will do it like this. So who can even give me an answer how many barrels we need? Who is good in math? Of course, we're gonna put it in the calculator anyway, but so second equation we'll have here is sum divided by units, oh sorry, by movements. So that's target or sum, target or sum divided by movements. Oh, we've got the first person to answer. Good job, good job, good job. Good job, Benjamin, Amreen Patel, very good. Perfect. Equals units. So the fast people who wrote down, of course, so yeah, correct and correct. Now, yeah, so we don't really need a calculator for that, but all right. Now, if I'll place here 100, I'm expecting to make 200 and not 22. Let's see. Yeah, make perfect sense. Let's also bound the entry to the real price and not 71. Okay, and let's clean the like this. Okay, yeah, pulled it down a bit, pulled it down. It's messing around with us, so we can flatten the price in here from the coordinates. We don't have to drag it manually. And now let's use the same reference to design the stop loss. All right, so we've got $2, we've got $1 is the ATR. Actual PAM will be 2. Who knows what PAMS is? PAM is potential average movement, which is what I expect that will happen in a range using this reference of ATR. So if the movement per day is 1 and I want $2, naturally I can expect that it will take a couple of days. I can be wrong, but again, I'm using statistics only. So we'll get rid of what we've got here so we can better design our levels. We've got 72.70. Let's take the same ratio for the other side. So since we've increased by $2 for the take profit, we can reduce $2 for the stop loss. All right, now let's take profit. We said 72.7. All right, stop loss. We said 69.7. Yeah, that leads us to the 200 that we are looking for. Great. The problem is now, okay, so I'm happy to make 200, no problem. But I'm not sure that I'm happy to lose 200. Maybe I want to lose less, maybe half. So this is a ratio of 1 to 1, right? And in here, we can make or lose the same amount. That means, for instance, if I'm going to design another 5 positions like this, another 4, so potentially I can lose 1,000 or gain 1,000. This is a ratio of 1 to 1. But if I design a position to make 200 and max lose 100, and then I have another 4 positions, my maximum loss will be 500. My maximum profit will be 1,000, which to me makes more sense. So how do I adjust? How do I adjust to 1 to half? Okay, or 1 to 2. That depends how you're looking at it. So what we can do is simply cut the stop loss length by half, and okay, basically we can divide, maybe divide the ATR will be more appropriate to say. Okay, so we can go, just a second, ATR by half, or reference by half, maybe PAM by half. All right, so we've got expected movement by half, and then we get 1, and then we get 1. And if we put the stop loss $1 away instead of $2 away, which is here, just a second, yeah, then we can potentially, well, flatten that out from the coordinates. Otherwise, it can get funky sometimes, like this. Yeah, and we've got a beautiful ratio of 1 to half with a profit area, with a loss area. It all makes sense to us. We've already validated this with the ATR, so we know that it's realistic. Of course, we're no prophets, so nobody can know if it will really happen or not. But we've customized the position to make sense, and we have aligned it with what we see on the chart. So as a conclusion, if it gets to the green line, we're going to make 200, and if it gets to the red line, we're going to lose 100. Before we speak lastly about the value leverage and margin impact, is there anything that is any questions so far, guys? Any questions about what I've explained? There's a question from Kumel. What other instruments we can use? All instruments. All instruments, Kumel, the formula is displayed in here, supposed to work on all other instruments. currencies are measured with pips and not others. So obviously the numbers will be a bit different, but this can be applied on any other instruments, indices, stocks, anything else. Another question from Benjamin: how much were you actually spending on the trade? Well, that depends on what I'm planning to make, Benjamin, because at the moment we are with 10,000. I probably, when I'm trading, I'm using diversification. And for my diversification, I'm targeting a certain percentage every month, right? And according to that percentage, I'm also thinking about the exposure that I would like to make. All right, per trade or for the whole account. And then I can customize it with a balance and see that it would make sense. So for instance, if I'll compare the possible loss in here of 100 and I'll compare it with 10,000, this will be 1%, right? So basically I can give you an equation to do this very, very easily. So what you can do to measure the exposure is just possible loss divided by balance equals factor, and then factor times 100 equals percentage exposure. So basically, if I'll divide 100 by 10,000, that's 0.01. If I'll multiply that by 100, as displayed in here, it comes down to 1%. Which seems fine. I mean, that depends on what exposure you want to work with. Some people work with higher exposures, and that also accumulates as many positions you take on your diversification. So if I'm exposed with more, let's suppose we wouldn't adjust it to 100 and it would be 200, so this will be 2%. And if I have 5 positions like this, I'm at 10%. It's a bit more advanced than what we've learned so far, but the question is, how much will I spend? That depends on my targets and numbers. Thank you for the question, though. That's a very good question. All right, so the last thing that I would like to do is to ensure that I really can take the position, because we're talking about 100 barrels here. Do I really have can I really afford 100 barrels? Let's see. Well, what I'm gonna do now is just to write down the actual price. So we've got price per barrel, 70.7, right? Price per barrel, 70.7, price per barrel, and we've got 100, which is the amount of barrels. All right, so the price per unit times amount of units gives us the value. We don't have to remember that. We don't have to remember that because it's displayed in here already. But let's just, for the sake of the discussion, we'll do it together, because if you're using MT4 or MT5, you're not going to be able to see the value unless you're going to use this calculation. So using the web trader, you've already got that. MT4 and MT5, this is the equation for you. So yeah, that's the value. And as you can see displayed in here, we've got the leverage. What the leverage does, the leverage is just a multiplier. It's just a multiplier. What it does is it multiplies buying and selling power. No more than that. Leverage, buying and selling power. Okay, multiplying, maybe I'll write it down. Buying and selling. Yeah, so with the same, this 1 to 10, what happens is we can divide a value by 10 and we actually have the necessary amount. Margin impact. And now I know how much I'm actually using out of the account, and not 7,000. which this position might be big, right? It might seem, okay, just a second, Benny, you're going to use 7,000 out of the 10,000. Well, that's not right because we've got leverage. Yeah. So with the leverage, because we're multiplied by 10, with the same idea, I can divide a value by 10. Okay, which brings us to 700. Now, if we'll do, again, calculator is really not necessary here. So you can see, right? All right. That is so far, guys. That is so far as I've answered to Kumal, sorry. The equations and numbers that I provided you in here should make sense with any other instrument. So you can use the equation, you can watch again this webinar, and I hope that it helps. Unfortunately, our time for today has run out. I hope that you've acquired some things that will be useful for you moving forward. Thank you all for joining us today. You're all welcome to tomorrow live Q&A. So have a fruitful week. Best of luck with trading and have a good day.